Good afternoon. This is Sean Golding with Golding & Golding, here to discuss a proposed recent change to the 2022 1040 tax return involving digital assets, cryptocurrency. This is just the draft form of the 1040, but presumably pretty accurate to what will be finalized when 2022 taxes are due in 2023. So why don't we go through the basics, right? Cryptocurrency, yeah, it's got the phrase currency in it, but from a U.S. tax perspective, it's not treated the same as fiat currency, U.S. dollars, things of that nature. It's treated as property. The transactions, though, they can still be taxable. You sell the crypto, you exchange it for different value, you receive it as income. Maybe you're working for someone and they pay you in crypto. It's still taxable. And then you have to go through those same requirements, employment taxes, things of that nature. Just because it's crypto doesn't mean that it's not taxable. The IRS knows a lot of people are not reporting or paying tax on these crypto transactions, and so they've been trying to crack down. And in the past 2 years, they've moved the key question about virtual currency, digital assets, crypto to the front page, and they're continually modifying it, and now they've made it a little more complex. So why don't we go through it? So when you're looking at the page 1040, okay, the 1040 tax return, page 1, upper middle, you see a question directly asking about digital assets, which of course includes virtual currency, cryptocurrency. First part is whether you've received crypto as a reward, award, or compensation. Okay, the IRS is breaking down more the specifics about the transaction so that they can figure out if you have it, how did you receive it? Was it from mining, or did you receive an award for something, or did you get paid in crypto? They want to know how you received it. Okay, what's the purpose of you having it? And then they want to know whether you sold, exchanged, or gifted it. Why? Because that's where it becomes taxable. So if you go out and you buy, I don't know, $1 million worth of Bitcoin, that's not taxable. And if tomorrow it's worth 10 million, well, good job, but it's not taxable either. It's whether you sell, exchange, when it becomes taxable. Now, from a gift perspective, I pause because it's a little more complicated. Everyone gets a certain bucket of gift and estate tax exclusion. And if you start gifting high value assets, whether it's crypto or otherwise, at the end of the day, you may become subject, or the estate may become subject, to estate tax. They also want to know if you've otherwise disposed of the asset. They just want to know, did you have it? All these different ways you might have gotten it. Here's the main ways people get rid of it, or it's taxable. And by the way, if there's any other sort of transaction that may have any impact on the crypto, they want to know about it. Now, at my firm here, we specialize exclusively in international. And when it comes to crypto, international, it gets complicated even more so. Why? Because the laws are in flux. There's proposed regulations. Let's go through a few key factors. While technically, if you just have an account with nothing in it but crypto, it may not be reportable now. Chances are it may be reportable in the future. But hyper-technically, if you didn't report a crypto account, you may not get in any trouble. In fact, if you look at publication 5569, it all but says if it's just a cryptocurrency account, then it may not be reportable. They use some weasel words in there, but for the most part, you could probably get away with that reporting. The problem is there's proposed regulations, and there's the problem of the hybrid account. So if you have an account that has both crypto in it and a reportable asset, then the question becomes, do you have to report the account? And the publication makes it sound like you would. And they don't delineate like what portion. Does it have to be more than 10,000 in crypto, or does it have to be more than 10,000 in the other reportable assets? So if you've got, presumably if you have currency and you have crypto and the total value goes above 10,000, you may have an FBAR reporting requirement. FATCA is for the Foreign Account Tax Compliance Act. When it comes to FATCA, more items are reportable than they are for the FBAR, not in categories of assets. For FATCA, you have to Form 8938. You have to have an interest in the asset. You don't need to have an interest in the asset for the FBAR, but it includes things like stock, where stock is not included for the FBAR unless it's in an account. And then the question begs, well, if you have cryptocurrency on an exchange and that exchange is overseas, would it be reportable for FATCA purposes? Excuse me. Then there's also the issue of funds, right? These days, There's crypto funds, ETFs, mutual funds. And so just because it's crypto doesn't mean that you would have to avoid the PFIC regime, which is Form 8621. There are some potential exceptions, exclusions, and limitations, although those are unclear depending on whether you're looking at the regulation or the instructions. If you're out of compliance, we have a ton of free information available on our main website and our sub-websites. If you're looking to get into compliance, you've got the voluntary disclosure program. If you're willful or you just can't certify under penalty of perjury that you're non-willful, there's also, if you're non-willful, you've got the streamlined procedures, streamlined domestic for U.S. residents with foreign assets, streamlined foreign. For foreign residents, there's also alternatives such as reasonable cause and delinquency procedures. Like I said, we have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate and something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.